That's closing bell on Wall Street, and now it's market domination overtime. We're giving you full coverage of all the moves to get you up to speed on the action from today's trade. Yahoo Finance's Jared Blickery joins us now with the latest market action. Jared.
Thank you, Josh. Well, it's a decent end to a troubling week, somewhat. Let's take a look at the action for today. Dow up 1% or 493 points. NASDAQ up a little bit less than that. S&P 500 closing in on 1%. Really a story about the small caps. But first, I want to show you the weekly totals because over these 5 days, we're still seeing some losses for the Dow, down about 2% over this week. NASDAQ down 2.75%, and the S&P 500 down 2%. Russell 2000 was up 3% today, and you can see it's not even down 1% on the week, so really clawed back a lot of those losses. S&P 600, similar situation there. I should add, too, that these small cap markets having their best day in months, and some other markets really came alive today. So let's dig into the sector action, and I'll show you what happened today first. Green across the board, all 11 large cap sectors for the S&P 500 in the green, led by materials. Then we have healthcare, then consumer discretionary, communication services, real estate, industrials, financials, and staples. All those outperformers of the S&P 500 are up more than 1%, and you can see the top two up more than 2%. And here's the NASDAQ 100 today. Alphabet, another bright spot, pretty close to a record high, if not a record high. Are seeing some dotted red, or some red dotting the landscape there. NVIDIA, Microsoft, Broadcom, Tesla, some of the larger names in the red there. Take a look at what happened this week, and that's when you start seeing a lot of dark red. NVIDIA after the earnings, kind of a fake out there, down 6%. Amazon down 6%, Microsoft down 7%. Nothing too drastic, but still kind of overshadows what happened today. Similarly, here's the sector action going back all the way to Monday. Healthcare, staples, and communication services, the only ones in the green. I'll add that healthcare, the only or the best performing sector since the beginning of the quarter, and tech down 5% for the week. So let's go back to what happened today, and I'll show you what was interesting in some of my leaders. We did see the bond market. Long-term rates came down by a few basis points. Maybe that fed into these results, but we have some interest rate sensitive sectors and industries like home builders, retail, regional banks. Those were some of the top gainers here. Home builders, by the way, up almost 4.5%, retail up 3.5%. Regional banks a little bit more than 3%, and you can see a lot of gains across the board, except for a few things at the bottom, notably crypto. And Josh, you and I will dig into that in a little bit, as well as some of the other things I've been talking about here. But I'll just leave you on this. Meme stocks, as a function of risk appetite here, saw a lot of that today. So hopefully this is the beginning of a turnaround heading into that very low volume, low volatility we're hoping Thanksgiving week.
All right, thank you, Jared. Well, stocks close sharply higher to end a wild week on Wall Street. Joining now with his picks amid this turbulent market action, we got Greg Halter, Carnegie Investment Counsel, Director of Research. Greg, it is good to see you there. Start big picture with this market, Greg. You know, my buddy Jared there was just calling it a decent end to a troubling week. How do you see it?
Well, I don't know about troubling. I think we've been up for 7 months in a row. For the averages, which is a pretty good streak. So certainly you can have these bouts of down activity every once in a while. I mean, the market does not go straight up, that's for sure. And a lot of this is certainly revolving around the AI and the whole, is this a bubble or is it not a bubble theme, if you want to call it that.
So is this just sort of a healthy pause, Greg? Just kind of catching our breath here, or no? Do you think, something more significant is brewing?
No, Josh, I think it's a healthy pause. I mean, again, nothing goes up straight up. You start getting these stocks that are many times away from their 200-day moving average. They get a little parabolic, and again, the earnings have to come through to support the stock prices, and sometimes the stock prices do get ahead because there's excitement on, whatever the current theme of the day or the week or the month is. So yeah, certainly it's good to have these healthy pullbacks, and it allows you the opportunity to enter some of these names that you may be looking at or have been looking at lower prices.
Let me ask you about, you mentioned the AI theme there, Greg, and this talk of an AI bubble. You had that NVIDIA print this week. and it was a strong print. It was a strong guy, but NVIDIA sold off, and I'm wondering what you think that perhaps indicates, what it could suggest.
Well, great question. I mean, it's so much of the market, not just here in the U.S., but I would say, international or international exposure in funds and ETFs and so forth. They did come through with excellent results. Compounding at these types of levels gets more and more difficult as you look at the law of large numbers. I'm certainly not saying that it's over at all, but to continue to do what they do would be something phenomenal. And I know they've thrown out the, I think, $500 billion number in terms of revenues at some point down the road. It's certainly been carrying the market, so there's a lot of weight on the shoulders of the company there, and how they are able to navigate this landscape. And again, I back up and say, in the U.S. we need power, and if we don't have that, a lot of this AI and data center growth that we've been seeing will not be able to happen.
We've been talking about stocks, Greg. I want your take on gold as well. You point out how the metal has cooled here after a strong run. I'm just wondering, that cooling, what does that possibly suggest, Greg, to investors about the macro?
I don't know if it suggests anything. I mean, at one point you had Bitcoin and gold going up at the same pace, and now those have decoupled as Bitcoin's come down. There's been a lot of discussion about central bank buying and selling U.S. assets. But maybe the increase in their holdings is just due to the price of gold doubling in the last 2 years. So I don't know that gold really says anything. Obviously, we've got a lot of debt in this country. There's concern of how that's going to be financed and paid. So people rush towards commodities like gold. I don't know if it really gives you a macro sense of anything. Until the last couple of years, gold had not done much for a decade or so, and it's really caught up, though.
You mentioned crypto there, Greg. I had a strategist on the show earlier, constructive on the stock market, but he did mention that crypto was cause for some worry to him in the near term. I'm wondering how you're thinking about it. Does it concern you, this prospect? People sell stocks to cover crypto losses. What do you think?
Possible, I guess, but relative to the size of the markets, I mean, crypto is still small at, I don't know what it is, 2 trillion or 1.5 trillion currently versus the size of the stock market. I guess on the margin, it could be making a difference, but that's a short-term focus, short-term type of event, I think. And that, Bitcoin has been very volatile historically, and I don't think that's going to change.
Greg, we'll end here. Given the backdrop, the environment we find ourselves in, Greg, let's end here some opportunities. I'm just curious, what are you screening for? What looks attractive?
Well, healthcare and energy are two sectors that have not done very well for the last couple of years. We are seeing some improvement in the healthcare names. I mean, just all you have to do is look at Johnson & Johnson and Lilly, Amgen. We continue to like Stryker and Steris. So those are some names in the healthcare space that we like. On the energy side, you've got Chevron and KMI, a big pipeline company. They both have plays, obviously, into energy, which we need in the country. And in KMI's case, it's a major pipeline around the country. So it's moving those gases and fluids around, if you will, to where they are needed.
Greg, great to have you on the show today. Thank you.
Thanks, Josh.
Public worries over the world of private debt starting to weigh on lenders, even for one of the nation's largest private lenders. And Yahoo Finance's David Hollerith joins us now with more. David, what is the story?
Well, so Josh, earlier this week, Blue Owl Capital, they're one of the biggest alternative asset managers that have a focus in private credit. They had a merger between their two funds. And there was one public larger fund and one private smaller fund. The private smaller fund was a little bit older, and they just wanted to combine them, and it was a little bit of a liquidity event so that the investors in the smaller fund could get out. Now, what happened is earlier this week, things kind of like attention was brought to this when the FT put out a story effectively just laying out the market value of the larger public fund was at such a discount compared to where the private fund was marked that investors after the merger would have faced a 20% haircut at this week's prices. Now, the merger wasn't going to close until sometime in the next quarter of next year, but it drew a lot of attention to what's going on right now, not only with the credit backdrop and concerns that are there, but also with the fact that these were both effectively retail vehicles. And so seeing this happen kind of draws attention to that because obviously Blue Owl and a lot of other alternative asset managers are looking to go further on into the retail channels given what we've seen this year from the Trump administration.
And is this a Blue Owl specific story, like I can cordon it off, David, or no, was the concern, hey, this could be something potentially systemic in the private credit system?
Right now, what we have is the company, they cited market conditions for why they called off the merger. We don't know exactly, the investors would have been able to vote for it and it could have even gone through. But what it seems like is optics based on the public valuations of private credit. And I know that sounds kind of funny, but the big difference here is that the way they're valued is differently. A private fund is being marked by the fund managers on a quarterly basis, whereas a public fund is trading at the market value. And right now, investors are sort of valuing it lower than its credit quality is at book value. At least that's what the fund managers are saying. So it's kind of just egg in the face for them, but it does call into the question in the current credit environment. We have seen these bankruptcies, which, to be fair, Blue Owl and some of the other larger asset managers were not really a part of that and look pretty good credit-wise right now. Still are wrapped into that narrative. Obviously, JP Morgan CEO Jamie Dimon had that whole cockroach comment about credit. It was kind of a broad adage comment, but it incited a lot of concern. And he did make some comments about just what is not known about private credit. And he sort of questioned that. And we're kind of seeing, he even mentioned the kind of vehicles, and they're these kind of vehicles. So there's a lot of assumptions going on in kind of a jittery market, but we want to pay attention to this just given that this is going to be a big retail focus going forward.
That's a big story this week. All right, David, thank you. Appreciate it. Well, tax and business software company Intuit reported stronger than expected results for its fiscal first quarter. Intuit also shared this week it signed a $100 million multi-year partnership with OpenAI. And our very own Julie Hyman spoke to Intuit CFO Sandeep Ajula about these results, company's AI plans, and a whole lot more.
The quarter was driven by the strong momentum we had coming into the year from fiscal 25. Driven by the consistency of our strategy, focusing on what matters most to the businesses and the consumers we serve, and the strong execution across the company. We saw our business platform grow 18%, our consumer platform grow 21%, delivering a strong 18% growth at the overall company level. And you saw the strong guidance we set for the quarter ahead, which is bolstering our confidence in what we think this year will turn out to be like.
Sandeep, we've talked about this a little bit before, but just for folks who perhaps didn't catch the last conversation we had, people who think of Intuit primarily as a tax software company, you guys offer a lot of other business services. Is there a way of sort of quantifying how much of your revenue you're now getting from exclusively tax services versus the bigger suite of sort of business services?
Great question, Julie. The way we think about Intuit is a fintech company that is serving 100 million customers across businesses and consumers. About 60% of our business is serving small and mid-sized businesses. About 30% or thereabouts is on the tax business and about 10% on Credit Karma. So 60% business, 40% consumer-oriented. And the company has really been focused on delivering areas that matter the most to our customers across done-for experiences using AI and human intelligence, being at the center of money decisions for these customers. And we are now focused increasingly on going upmarket, as traditionally the company largely served the smaller of the small businesses and the consumers. That's the evolution that's been going on at the company over the last decade plus. And Julie, what I'm really excited about, particularly in this era of AI, is a company's foresight, that we are always thinking about what's going to be the most relevant in the years ahead. And the fact that we've been executing on our AI-driven expert platform strategy since circa 2018, way before it became fashionable to talk about AI across tech and the investment community.
And I know that AI is helping your business clients in particular. They can query it as to how to improve costs in the business, for example. In terms of AI and the tax preparation, how much is it being used in that? And sort of what's the back testing, or what's the testing of it? In other words, what if the AI makes a mistake on doing your taxes? What's the sort of system in place to make sure that doesn't happen?
AI is at the core of the fabric of everything we do for the consumer and for the business. On the consumer side, as we think about the tax experiences, AI is helping guide the experience from understanding what the situation is. So we can take each customer through a very bespoke tax preparation experience so they walk away with the utmost confidence. As a company, we have about 70,000 attributes per consumer. So we use that to understand what the likely tax situation is and what the right set of questions to ask, so the customer has every deduction that they're entitled to and they don't pay $1 extra in taxes. And in terms of the accuracy of the AI is helping make the decisions in terms of the workflow. It's been tested across millions of customers. At the end of the day, we also continue to unpack our logic and provide the agency to the customer. I'll give you an example. For example, on the business side, we rolled out 5 agents. Our accounting agent is helping customers save up to 12 hours a month. And this is something that the customers are telling us. 45% of them said, it's saving me 12 hours a month. That's a day and a half that they earned back in productivity. And this agent does the work for them and unpacks, here's the decisions I made. And the customer could either confirm it or change it. And if the agent made a mistake in the rare instance, it learns from the customer's correction and improves its accuracy going forward. We feel really good about the accuracy of the agents, as well as the fact that we're putting the agency about the final decision in the hands of our customers.
Let's talk about the OpenAI partnership, because I'm not entirely clear on how it works, right? So if I go to ChatGPT, how does that then, what will get me to Intuit, right? Is it just sort of Intuit's advice is integrated into ChatGPT? How does that all work?
So you have hundreds of millions of people going to LLMs every week to go get advice on whether it's financials or other areas. OpenAI itself has about 800 million weekly active users. So we are super excited about the opportunity to highlight our platform to these users and have our platform be where their eyeballs are.
But again, like if I'm going to ChatGPT and I say, I want to put all my tax information in there, or I say, here, can you help me do my taxes? Does it then take me to an Intuit link? Does it just, incorporate the Intuit advice? How does that work?
So today, the way people are largely using LLMs is asking them questions such as, I had a car breakdown and it's about a $2,500 repair. What are my options? What should I do? And today they're getting very generic answers such as, you could put on a credit card, you could go get a personal loan, etc. As we work together and through our partnership, we will be giving very specific, actionable actions to the customer based on their specific situation. So when you go in and you query ChatGPT post our partnership, you will have the opportunity to then connect into the Intuit platform, link your account, and based on your specific situation, for example, we will know, hey Sandeep, based on your tax situation, you are likely to get a $3,000 tax refund. So instead of recommending go put it on a credit card, go get a personal loan, we will suggest, let's get your taxes done. Let's get you into TurboTax. They'll come into our platform to do that tax filing. Or here are the TurboTax experts that are local to you. Let's get that filing done. In essence, we're taking LLMs from a generic financial advice to a very specific financial advice unique to your situation, and thereby making it very tangible and very much actionable as we move forward.
Gotcha. Okay, Sandeep, you mentioned tax refund. So I have a question for you. Going into next year, because the One Big Beautiful Bill will be taking more of an effect, how much are you guys expecting clients to get in refunds as a result of some of the changes in that bill?
We think the One Big Beautiful Bill is going to be a tailwind to the U.S. economy, is helping the consumer. One of the unique aspects is that the IRS did not change the withholdings this past year after the bill was implemented. That would result in our expectations that many more people than usual would end up getting a refund in their taxes in the year ahead. So that should be good both for our business, but also good for the U.S. economy, as there'll be a new infusion of capital in the hands of the consumers to work across the economy.
Time now for What to Watch. Next week will be shorter than usual as investors ditch their trading desks for the dinner table. To celebrate Thanksgiving, the U.S. stock market will be closed all day on Thursday, November 27th, and have a shortened trading session on Friday the 28th with an early close at 1 p.m. Eastern. On the earnings front, we're going to be getting reports from a number of retailers, including Kohl's, Best Buy, Abercrombie & Fitch, and Dick's Sporting Goods. And tech companies, they aren't done reporting either. On the software side, we're going to get reports from Zoom, Workday, and Zscaler. On the hardware side, we're going to hear from Dell and HP Inc. on Tuesday. Taking a look over the economic data, we're going to be getting some government-issued reports that were delayed thanks to that record-long government shutdown. On Tuesday, the September retail sales data will be released alongside pending home sales and the S&P Case-Shiller Home Price Index. And on Wednesday, initial jobless claims come through, as well as that delayed September durable goods orders. That's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.